Hey, what's up, folks? This is Jesse with Keeping It Real Finance, a channel that always has your back and tells it like it is. Well, today's video is inspired by the red in the market today on how to capitalize on the red days. So I was looking at the market and I thought, wow, this presents some big time opportunities with these 10% plus drops on many of the coins that are out there. And so I really wanted to highlight that in today's video on sort of the mindset that you have to have if you're a crypto trader and how to take advantage of times like this. I personally look forward to every red day that comes up in the market because that is an opportunity for me to buy, right? I really enjoy it. And I honestly kind of look forward to the red days a little more than the green days, because when the green days are up, it just kind of gets boring. I usually turn off buys at that point. But on the red days, I activate things, I start making moves. And so that's what this video is going to be all about today, on how to capitalize on red days in the market. So if you're new to the crypto space, if you've been in it for a little while, and there may be some strategies here that might apply to you, and some things that you could put forth that really might help you out when downturns like this do happen, okay? So with that, if you enjoyed today's video, make sure to hit the like button. Don't forget to subscribe to the channel if you have not already. And if you click the bell, you'll be made aware whenever I post time-sensitive content just like this, all right? And now, let's get it going. Now, when the market is down, the red days are really important, and here's why. So corrections in the market are, first of all, indicative of market health. So I've mentioned this before on Twitter that the crypto market can't just go up in a straight line, that it moves more so in a diagonal heartbeat. It blips up, it blips down, it blips up, it blips down. But while it's doing that the whole time, it is going diagonally upward, right? So when in doubt, zoom out. That's a good way to look at it. Now note that I do this over time with my portfolio where I periodically check the trajectory, okay? So even with these dips, it steadily continues to just rise. That's what it does. Now, red market days are also critical because that's when it's in your best interest to identify predominantly buying opportunities, right? So you may be following a project that you want to get into but haven't gotten into yet. That could be because maybe it's been on a crazy run lately, right? Or it's just been, it's steadily moving up over time. You've been looking for an entry point, you haven't found one. You may have existing positions that you want to increase your market share, right? We all have those. Or you may also even want to consider tax loss harvesting. If you have a project that just isn't reflective of where you want your portfolio to go, and you've realized gains elsewhere. So what you can do is you can sell that project and offset your tax burden. So specifically here in the US, this is how it works, that if you have a significant gain and you sell and realize that gain, you're going to have to pay taxes on it. Well, likewise, if you sell at a loss on something else, then that would offset your gain, okay? Now, this may also apply in other countries. So, the number one way to capitalize on red market days, in my view, is with dollar cost averaging, right? So, many platforms allow you to set up recurring buys. Now, typically, though, I toggle those recurring buys off when the market goes bullish. Meaning that the estimating moving averages, these are the EMAs, the long-term trends of Bitcoin, the 20-day, the 50-day, the 200-day are lined up the way they're supposed to be, with the 20-day on top, the 50-day in the middle, and the 200-day on the bottom, okay? Now, when the EMAs go bearish, however, where the 20-day crosses below the 50-day, for example, and that's kind of what it's looking like right now in the market, that's when you want to turn on your recurring buys, so you're dollar cost averaging while the market is down, all right? Now, I typically do this with Voyager. That's the platform that I like to use. But you can do it with other platforms as well, Binance, Coinbase, KuCoin, etc. You can set these things up. where you can set up your recurring buy for typically as low as like $10 a day, meaning that each day the market is down, I'll average down the positions I'm looking to increase market share with, right? Now, what I'm not doing, and this is also key, is making one purchase when the market is down, but rather multiple purchases, right? That is key because we don't really know if the market will dip down further. There's a lot of memes that are out there on this that say, you know, the market is dipping and it just keeps getting dippier, right? We thought it was down and now it's gone even worse. Well, if you bought on that first dip and then it dropped even further, you're going to be kicking yourself for doing your whole investment on the first one, right? That's why you want to do a little each day with the dollar cost average. Now, outside of just having fiat available to buy when the market goes red, it's a good plan to always have a stable coin reserve on hand because you never know when the market will go red. So if you are peeling off profits, you put those in stablecoin reserves, as well as you can just build up a stablecoin reserve over time. You could invest $20 a week, $100 a week, $1,000 a week, whatever, $1,000 a month. However you want to do it, you can build up that stablecoin reserve. The point, though, is that you have a fund to make purchases that is immune to market volatility, okay? Now, often in crypto, you hear the phrase hashtag buy the dip or hashtag BTFD. You can probably figure out the F. Now, it's really important to know where we're at in the market cycle and if we've reached the proverbial blow-off top of Bitcoin that signifies a 2-year downturn, right? So in my view, with this current dip, we're not there yet. We're not even close, all right? Now, what you also need to understand is what causes red days in the first place, right? So typically, they're brought on by liquidations of over-leveraged traders. So these people are trading with money they don't have. They've been liquidated, and they liquidate them all at once, and it tanks the market. This happens every couple weeks, every couple months, constantly in the crypto market. This happens, right? What also happens is a FUD in the form of fear, uncertainty, and doubt in news outlets or influencers. So a tweet by somebody important or a news outlet saying that something bad is happening can take down the market. Or the market can also go down due to large whale triggered coordinated sell-offs. So basically a whale is somebody who has a massive position. They sell a bunch of it all at once. They know it will tank the market. It triggers everything else, and then there it goes, right? Now, what you need to ask yourself is this downturn reflective of anything negative in any of my holdings? And you'll find in almost every case the answer is no. That's important, right? What it really comes down to are the EMAs of Bitcoin and whether Bitcoin is up or down on any given day. So, as long as the market is coupled with Bitcoin as tightly as it is, right, the market will ride whatever Bitcoin is doing, okay? You need to know this, all right? Now, outside of key transitions in market cycles, though, the daily ups and downs of Bitcoin truly don't matter in the big picture. Now, typically when the market is down, myself, as well as others on CT, this is Crypto Twitter, ask what everyone's buying. Hey, what are you all buying, right? Well, fabulous opportunities exist in some of the coins in my most recent reviews. So I've recently reviewed Trace. This is TRAC. I reviewed ALBT. I reviewed MOVR. I've reviewed BTT. I've reviewed FET and others. All of those are at fabulous prices right now, okay? So the biggest message that I want to convey through this video is that if you're going to participate in crypto, it's key to have a bigger picture long-term mentality, because otherwise you're just a gambler and you're on the verge of being wrecked at any moment, right? So you cannot have a short-sighted strategy. You have to have a long-term, big picture view on what's going on. If you know what's truly happening in the market, then when it goes into a red day like this, it doesn't even faze you. Like I said earlier, red days don't faze me at all. I actually really like the red days because I go, hey, this is an opportunity for me to buy into that thing I was looking at or that thing I reviewed. Oftentimes when I review these coins, I don't even own that project yet. But when I look at it and I go, hey, this is a really good one, I'm going to pick it up later, I do. What I don't do is buy a ton of it beforehand and then review it, because I find that unethical, all right? So, it's important for you to continue to build your market share, whether the market is up or down. And do you really think that the big traders aren't looking for entry points on red days? Of course they are, though most likely not all at once, right? So that's it for our video today. I hope it makes sense. I hope you embrace the red days. Take advantage of the opportunity that is presented to you. On the days that it's just barely red by, fractions of a percent, those really aren't, red days. Days like this, though, where we've got a double digit, a 10% drop, a 15% drop, some of these projects are down 20%. Those are huge opportunities. So when you look at these projects, does the red day signify any kind of fundamental change in that project? And if the answer is no, then this is a big opportunity, right? So what are you buying on the dip? Go ahead and leave it in the comments. I would love to hear it, all right? So with that, I hope you enjoyed today's video. If you did, make sure to hit the like button. Don't forget that I am also on Twitter at KIR Finance, where you can find me tweeting and retweeting on a regular basis. Check me out there. And for a friendly reminder, this is Jesse with Keeping It Real Finance, channel that always has your back and tells it like it is. And I will see you on the next one. Later.